Okay guys, so I have in front of me, this is a 144 tick on the RTY. I'm going to strongly encourage you to do your testing on this with either the RTY or the YTM. A couple of reasons. One, smaller tick value per point. Two, they tend to be a bit less volatile and the tick speed is slower. So this lends itself very well to these smaller tick sizes. And 144 is as low as we go. And that's perfectly adequate, and you'll find that will ultimately be the tick size that you're going to use most frequently with this. Although I'm going to show again when we get to the premium version how we look at different time frames in this, or tick sizes, to look at where we are in the very short and intermediate trend. We'll get to that in a second, but let's put this together with the free version, or free plus whatever's native to Ninja and what you would download from the NinjaTrader ecosystem. All right, so we'll just do this relatively quickly. This is what you're going to do, so I just figured I'd walk you through this. It's not hard, all right? It's as simple as it can be. All right, so first thing we're going to do is just go to the Keltner channel EMA. All right, so first thing we're going to do is set this up as a, I think I have presets in here. So just a Keltner channel, and I want a 3 times the ATR, right? It's 3 times the average true range on a 55 period. Right, that's what we're after here. All right, so let's apply that. Then I'm going to do it again. I get a second one, and I'm going to add that template, and I'm going to go to a 4 ATR. Same period, still 55. We're just going to 4 times the average true range. All right, now, you may not like these colors. It's up to you. I mean, I think in the other one I was using deep blue here. It can be, sometimes there's so much green and red on your chart. Right, it can be just too many. You can miss something here. So again, it's personal preference, whatever you like, right? You may not like blue and white bars, but that's just what I've gotten used to. All right, so we've got our 2 Keltner channels. Now you'll note here that with these, I've got the center line is transparent because, and again, this is optional, it's not necessary, but I just am used to this and I kind of like it. So I'm going to use the EMA slope color. Now the EMA slope color is not native, but you can get it on the NinjaTrader ecosystem. So we'll look at that in a second where you get these. So again, we're going to go 55 period. So that's going to put my center line here is going to be the EMA, right? It's a Keltner EMA, but if you don't have them transparent, it's just going to be a white line. And that's perfectly adequate. Again, this is just personal preference. If you like that color coding here, but there are times where that might influence the decision just based on trend or chop or lack of trend. So that's the basic foundation. Now, another option would be to add the 2 period, or 2 times the ATR. I'll show you that. Some people find it's too much. It can be a good filter. Let me get back to it can be a good filter for when you're in the chop, right? So if we go to a 2 times the ATR, again, I keep the center line. Right now, that can be too much for people. It's up to you. I kind of go back and forth, although I've kind of gotten used to it with just the outer bands here. But you'll find examples here. The general premise would be, there has to be a very good reason for you to take a trade if we are just in the inner band. It's almost like a standard deviation off of VWAP. If you're just in the inside bands, this is the higher risk because this is a counter trend kind of an approach. When we're in the middle and we're closer to that 55 period EMA, that we have no trend, right? So this is what you have to be careful about, right? Now we're still putting the template together, and we have some filters for this, but this kind of zone here can be dangerous. It's when you get to the outer edges here, when we get up to 3-4 times the ATR, where this is most effective. So for the sake of just clarifying and keeping the chart a bit less cluttered, let's say at the very least we'll just make that invisible. All right, add it as needed. Okay, so that's I think that's everything we need on the chart. Again, as if you're not using our initial balance, let me strongly encourage you that you get that somewhere. And you don't have to buy it if you're on a budget. Take the first hour and mark the high and the low. Right, you could just do it with a horizontal line, but have it somewhere. I promise you'll thank me later as members and those that have followed our work that we do in the day trading markets or day trading with Ninja will know that is, well, I would tell you, in addition to VWAP, those are the 2 most important numbers on the board, right? You got to know the IB high and low are. You have to know where VWAP is, or you are essentially blind to what the algos are keying off of, right? So things that would be important to have, again, if you don't have the budget to buy an indicator, mark it yourself. All right, so there we go. So let's go to what's underneath. Underneath, we're going to have 3 indicators here in the free version. 2 of them, well, let's see, one of them's native. 2 you're going to have to get from the Ninja ecosystem. So first one we want to put on here is the MACD with the Bollinger Band lines, MACD BB lines. All right, so let's just go ahead and apply that down here. And let me show you again. This is very easy, right? If you go over here, this is the. Let me go back here. So if you're at NinjaTrader ecosystem, you want to click on User App Share. Click on User. If you own Ninja or had noodled around on Google, that you probably come across this. But if you're new to Ninja, or if you're one of our members and you came in because you were interested in crypto originally and now you're diversifying into futures, you may not know this is a resource here. So these are all users that have donated. They've done the coding here and made these available to you. So this is where you're going to go get these. So if you, for example, if you were needed that, MACDBB, hit enter, and you're going to get a couple of different versions that users have donated here. I think this is. It's one of these 2 here. I think this is the one we have here, is the MACD BB lines right here. One's not better than the other. They're just format is slightly different, but the underlying code is exactly the same. But just so you know where to get them. All right. So there's the MACD BB. All right. So that's right what we're going to use here. Now, in addition to that, right, I'm going to show you how we're replicating what's in the Cadillac version with our Devil's Edge. By what's native to Ninja and what you can get for free. All right, so let's carry on here. So in addition to that, now I'm going to add a squeeze indicator. Now, off of in that same source, it's got the label of R squeeze. Let me find it down here. So where are you? R squeeze right here. Right. So we're going to put R squeeze on. Give that a sec to. Get sorted. Okay, so really what we're after here is not so much the histogram. What we're looking for is the areas where we have a squeeze. Now, most of you will know what a squeeze is. It's John Carter came up with this years ago, and it's a very useful tool. So this is when the Bollinger Bands get inside of the Keltner channel. So we have a reduction in volatility. And the premise is, and what you'll find is very consistent, is that when we're in periods of very low volatility, we come out of it and the volatility expands. So we want to try and avoid trading periods where we have very low volatility, because that's likely to get you chopped up, right? So here's a good example, right? A long squeeze here. We're just doing nothing. And then we get a little increase in volatility, right? Up, down we go. And then right here we get another little squeeze, right? So if you're not familiar with it and what it's doing, it's just Google TTM squeeze and you'll get more information than you'll ever need on how to use it. But it's simple but effective, right? Low volatility. All right, so you're going to want to have that on as well. I mean, you could even just go down to this, because what you're really focusing on are the yellow dots. When do we get a squeeze? Like color code it, again, choose whatever you like. I use yellow so that I don't miss it. But that's really all you need right there. Now, the last one is going to be the vortex. This is native to Ninja, so we're going to go down to the V's here, and there's vortex indicator. Let's put that underneath. Now, many of you may not be familiar with this. This is it's essentially a trend following indicator here. So let me suggest this to you here. If you're not familiar with it, just go to Google. Just Google vortex indicator. This is a pretty nice write-up on it. This is Investopedia, where you can see some examples. And for those of you that are interested in the code and the formulas, this would be worth reading. Let's get an insight into what it does and where it came from, how traders use it. It's not terribly well known, but it's very effective, right, for trend following, for the start of trend and end of trend. Very effective indicator. I see very few people using it, which draws me to it all the more, right? So that's worth a read through. But again, you just go if you want to, if you don't like this one, if you want to dig deeper, Google is your place to go. All right, so let's get that off here. All right, so we've got everything listed here. Now, we have all of the information that we need here in our free version here. All right, so now let me make this point here additionally with the vortex. And again, color code to your liking. But your signal line is the red line. So when we cross, like this example, here, let me get my. When we cross above the blue line here, we have the start of a trend. You can see that's reflected. We do come out of a squeeze, interestingly. We come out of a squeeze, and you see the MACD fly and the histogram climbs. When we have this kind of action here, right, note in the squeeze. Right, we got a long squeeze here, vortex just back and forth, back and forth, right? This is not what we're looking for. What we want are these nice wide distances, right? So you'll see, right, as the histogram is growing and peaking, right, it's these kind of moves here, and particularly you'll note here that it doesn't stay there. Right, so there's an oscillation to it as we get strength of trend and then the trend weakening. Right, you look back over time, right? It's a constant ebb and flow between. Remember, red is your strength, so whether it's up or down. So here would be coming down. Right, we get a little overlap here, but then coming down. Well, here was the huge move down at the end of the day. But again, note it doesn't stay there. Right, so there's an oscillation to it as we go from extreme volatility to reduction in volatility. Very useful indicator, very underused. So let's pull that off here. Okay, so the premise of this is very, very simple. And the idea is because it's a counter trend. So what we're looking for, and this is just a these are two particularly good examples here. We'll go back through some others, and I would encourage you to do a little trial and error yourself and just load up some charts and take a look at what you'll find here. So what we're looking for, I'm going to open this up here and kind of pull these down a little bit. All right, this one in particular, because what we're really focused on is just when we have the squeeze, but the vortex is very useful. Okay, so here's a good example. I'm going to just use my arrow tool. So when we get into this upper edge here, where we're between the 3 and 4 times the average true range, right? So here would be an example. Oh, all right, you can see them clearly, right? Here's an example. Here's where we get outside of 4 times the average true range. Particularly good example, right? These are what you're looking for, right? So that you could. I mean, this is either you could have an alert go off, or, you just eyeball it here. It's up to the individual how you want to approach notification and when that's happening here. Certainly, you can do it by eye. But what we're looking for is the combination here of the price action going into that pocket between the 3 and 4 or beyond, in conjunction with what's happening with the MACD and the Bollinger Bands. So what we're looking for is this area where we get some better separation. Now when we get to the Cadillac version, you're going to see this a little better, right? It's the trade-off, working with the free stuff. But the free stuff is adequate. It can work. So if I open this up here, right? So as you see now, as the MACD is up, we're beyond a standard deviation of the MACD. So what you're looking at here, the line that connects all the dots, that's the MACD, and then we have a Bollinger Band of the MACD. So this is one standard deviation of the MACD. So when we're pushing like this outside of a standard deviation, we've got strength of trend. Right? It's when you have strong trend, it's when we're hugging right on the edge of it, right? We're right on the edge. That's what we call it, the devil's edge. When you get right on the edge, the ideal scenario for this kind of a trade is when we get a little separation between the MACD and the Bollinger Bands. That means we have more pressure that has been created that is prone to now be released, whether it's above or below. Now here's an example here where we get a little pullback in the middle. We're right in the middle of the zone here. We get a little pullback here, but we don't really get any separation. We get barely outside here, but it's not good separation. Same here. What we want are these areas where we have distance. Now you'll see it a little better when we're not working off the free version here, but this is decent. Here, let me pop this so you can see the price action. Not great. No, this is a good example right here. Well, note here, we get a little separation, but we just barely are touching 3 ATR. Right, so that's a judgment call as to whether or not you would want to take that. Note here we go into a squeeze where we're sitting right here. Now this is without the initial balance, I lose track of where we are in the day. But the example is the same. So here we get just beyond, right, the 3. We don't quite hit the 4. So this is a prime example here. Now, as we come back down, that's the trade we want. So let's just take a look at it. So from here just to the center line, well, there's 32 ticks, right? If it keeps going, if you stay with the trade here, now there's a few things to help you stay with it. Now note the vortex stays underneath the signal line until right about here. It's right about here we come back. But the MACD starts to crawl back into the Bollinger Bands right here. So this trade from here, right, is giving you, it's right about there. There's 50 ticks, so 250 per single contract off of that trade. All right, now let's go over here. We'll look at a buy. All right, so here's a buy side. So ideal location, right, between 2 and 3. We've got pressure, right, built up here. So from that we get, right, as we move back in the Bollinger Band, so let's call it right here, just to the midline, there's 32 ticks. If it keeps going, right, you stay with it until here's where we get the little rollover. So you ultimately got another, the rollover's right about there. So there's another 50, let's call it 50 ticks, right, with slippage. So there's another 250 right there. Right, here's another one. Right, we're getting outside. We got all sorts of pressure. I've got some separation. Vortex is underneath and climbing. So the trend has been down. I've created this pressure. Let's see if I can bring this down a little bit. All right, so here's the pressure valve. Here's the release as we go back into the standard into the Bollinger Bands. Well, let's just assume you're getting right to the midline. Here, there's 42 ticks. Right here, now here we get outside, as I showed this example earlier, but we are not even close to the outer bands. Here's a decent one. We got a little separation here. Now here, you know, not everyone's going to get you all the way to the midline, but here, this is, what did we get there? Man, that's 43 ticks, right? It's bigger than it looks. So you got 43 ticks there. Now there are going to be times where you might take this and you know you've got a target. You got a target of the midline here, and it comes back up, and this could very easily have stopped you out. What you'll find with this is that when you do take a stop, it's rare that you're taking a full hit on the stop, because often once we get outside the bands, I would recommend trading this with 2, 3, or more per entry, because the goal here is to get your initial scalp out to cover. So you might have in the RTY, you might have a 10 tick first target, so you're after $50 there to cover the initial entry, slippage, commission. You're trying to get at least 50 there, and then maybe that's a tightening of your stop, just in case you get a kickback like you did here. Kick, kick, kick. Now eventually, right, as we start to roll over, then it's a question mark as to whether or not you want to go with that momentum. The ideal scenario is when we're outside of the standard deviations, then we come back in. So here, you might look at that and say, well, man, look at the long move that was there, because if you just stayed with this, you know, you had 100 ticks. Well, there's a little bit of insight here that we need to consider what's happening with the MACD Bollinger Bands. So there's two ways to look at it. What we're focused on is when we're getting outside of the Bollinger Bands, then coming back in. But when the market is trending and we get these long runs here where we're just hugging on the edge of the standard deviation, that's how the MACD is more commonly traded, right? Not that there's any one way to trade it, but that's how it's more typically noted, in that people will look for entry when we break below, on the idea that we've got potential for strength of trend. You can see it here. We can see it here where we're hugging along the line. These are the stronger moves. But what we're looking for specifically, as you're first learning this, are those moments when we get outside, because we've had this huge trend here. Now look what what comes up, right, tends to come back down. So if we focus on this section here, once we got out and came back in, now note here, we're well outside the bands here. Right, we're well outside. They come in here. Now, we're not even close. We're not even back to the 4 ATR, but that's still, you want to take that trade. The key to the entry is that the MACD dots have come back inside. Well, let me get right on it. They've come back inside the Bollinger Band. So that's right, really would be right about here. You'd be entering right here. Now, my suggestion is no more than a 16 tick stop, right? You just don't need it. 12 to 16 is ideal. 16 at a max. So for the ATR that I will typically use, and I will do this in multiple contracts, depending on how far ahead or where I am on the day, I might start with a 16, then tighten to a 12. Or some variation, right? Kind of depends on how the day is going, but I strongly recommend no more than 16. I would start with a 12, right? 12 is typically plenty. So here's another one. But when we're out here, when we get just inside, that's the trade, right? We want that as the dots come back in, right? So to the center line, which is your first target, there's 40 ticks. Right here, it's not great separation. It's not as good. Now, it's, the time of day is a little bit of a variable. Right, so here we're, I think it looks like 1 in the afternoon. Here's a decent one. Little separation. Here's the entry, right? So we want to come here as we come back in. We've been on this bar to the center line. There's 32 ticks. Now, you don't have to exit, right? Often we'll go from the outer bands to the lower bands. You will certainly see that here, but your first target, and where you'll often see a reaction, is at the midline. Right, so the first target, if you're in this trade, is get to the midline, and you'll find that often the Bollinger Band, or pardon me, the MACD will get back into the Bollinger Band as you see it here. Right, we make the midline. Now we're back in the Bollinger Bands. We don't want to enter this take an entry when the dots, the MACD dots, are inside the Bollinger Band. That's not what we want. Right, this is entirely focused on. In fact, that's the no trade zone. What we want is when they're outside on either side. Right, whether we're going with trend or we're counter trend trading. It seems simple, but it takes a little practice to get used to the kind of look that we're after here. This is particularly good right here. Now note, this is good in the MACD, but where am I here? I'm not to my 3 or 4 ATR. So this is a judgment call as to whether there would have to be something else there to make me want to take that trade. All right. So for example, I'm just looking at it. Right. It looks like you're coming right up to a golden zone. So even though we're not at the 3 ATR, I'm right there at a golden zone. Now I get down below the Bollinger Bands and I come back up. Right. So and when we get to the Cadillac version, right, this is all it's sitting there. Right. You don't have to draw it. The auto fibs or the measured move indicator will show that to you, so you'll know, hey, this is potentially an area to pay attention to. MACD comes back. Pardon me. The dots come back into the Bollinger Bands right about here. Right, vortex crosses over. Now this is see, you're getting it from the outside, but you're going all the way up. Right, so it rides it all the way up here. Now you get up here, this would be a judgment call, right, as to whether or not you want to take that. So you got the first one, right? So this was, again, with some practice and some experience here and getting used to working with our auto fibs and measured move indicator. Well, we got 58 ticks there, right, to the outer bands, right, before we crossed over. Now, you're very much set up here to take the ride from the golden zone here as we came back out. You didn't get target, right? Target's up here. Eventually it gets target, but you didn't get it on this swing. So as we come back down, this is potentially bought it, sold it, right? Bought it, sold it, right? So there can be quite a few number of trades here. So from here, starting the day, if this is your first trade, got a nice winner here, got a nice winner here, got a nice winner here. Right, now you're taking this one, right? So let's not be misleading here. You are absolutely going to take stops, but your winning percentage is going to be so much higher here. So you might have taken that one, right? We cross over here. Now you'll note here, vortex is still right, trend, EMA slope is still hot. Right, so it's a judgment call, but you're sitting here right at prior resistance, so you can make a case here that you're kind of selling into that prior resistance. The Bollinger Bands now they're hugging. You got almost no separation here, so this is a less desirable trade, but still, if you took it, right, you come back in right off of that bar. So what did you get? You got 13 ticks there. So if your scalp target is 10 ticks, which I'd recommend, your scalp got out, your stop moves to break even, so this is a scratch trade. Take this one. Right, you didn't get to midline, come back here. Now, well, what would we get here again? Not to belabor the point here, but if you're probably filled there. There's 13 ticks, so your scalp is out. Your ATM should move your stop to break even or reduced risk if you're not going to your entry price, perhaps 5 ticks back from it. Right, so your potential here is to minimize risk dramatically here. You got another one here, but the bands are not right. Or pardon me, the MACD dots are not right with them. We do not want to take a trade when they're in the middle. Only when they're out. Now here you got no separation here. You're not quite to the bands, so that's a no. This is end of the day. So it's getting a little harder to show you the separation here because of the big move that we got. Let's see if I can do that way, how you would be seeing it during the day without what comes, right? So this is not bad, right? We're touching up here into the 3 ATR. We come back in right here. All right, so we're essentially right in here. You got 10 ticks to the midline, and it went ultimately before it crosses back the other direction. You got down here, you got 35 ticks. Right, so that's the basic concept here, and you want to be looking. Let's clear this up here and get rid of this because I know that's very annoying because I talk, as most of us do, when we teach, we talk with our hands on the mouse. All right, so that thing gets very annoying. All right, so let's get back all the way over here to the edge here. Reset this a little bit. All right, so this is a little tougher, right? You've got to look at three things down here. You got to deal with this, but the basic premise here should be very simple. I encourage you to do some testing and sim with this. I think you will be very pleasantly surprised at your results. Now, that's the basic. Everything is free or native to Ninja. Perfectly adequate. You could trade this very successfully. Now, let me show you how to increase some of the insight probability you have. Some of those trades that you may not take, some of these inside trades that you might have taken because there's something else there, and how we can kind of add some extra insight into this through the premium indicator version. All right, so let's be back in a second. We'll take a look at that.